Imagine doing everything right. You went to college, got the degree, landed a job. You even paused your student loans during COVID because the government told you to. And then one morning, you get a letter. Your credit score just dropped 91 points. Your tax refund? Gone. And 15% of your paycheck is about to disappear automatically. This isn't a nightmare. This is the reality for 2.6 million Americans right now. And if you have student loans, you need to watch this video. Here's how we got here, and it happened fast. In March 2020, the government did something it had never done before. It hit pause on student loan payments for everyone. No payments, no interest, no penalties. For 3.5 years, millions of borrowers got used to life without that monthly payment. Then in October 2023, payments came back, but the government added a safety net, a 1-year on-ramp period, meaning if you missed payments, you wouldn't be penalized. Yet, that on-ramp period ended September 30th, 2024, and that's when the clock started ticking. Fast forward to early 2026, and the New York Federal Reserve dropped a bombshell. 2.6 million additional federal student loan borrowers had their loans transferred to the Department of Education's Default Resolution Group in just the first quarter of 2026 alone. That follows another million defaults in late 2025. And here's the part that should make your jaw drop. The average person who just defaulted is 39 years old. Not a fresh grad, not a dropout. Someone who was making payments just fine before the pandemic. Okay, so what does default actually mean? Because I think a lot of people hear that word and think, okay, bad credit, whatever. No, it is so much worse than that. Let me walk you through the 3 stages. Stage 1, day 1 after a missed payment. Your loan is officially delinquent. Late fees begin immediately. Stage 2, day 90. Your servicer reports you to all 3 credit bureaus. Your credit score starts taking damage. Stage 3, day 270. 9 months of missed payments. That's default. And this is where it gets serious. Once you hit default, your credit score can drop by as much as 175 points. You lose access to federal student aid. No more deferment, no forbearance, nothing. Your entire remaining loan balance becomes immediately due. And then the government can garnish your wages, up to 15% of your paycheck, automatically, without even suing you. They can seize your tax refund. They can even touch your Social Security benefits. And here's the kicker. Involuntary collections were temporarily paused in January 2026, but that pause is temporary. Wage garnishment is expected to restart this year. If you're in default right now, the window to act is closing. So why is this happening to millions of people who actually wanted to pay? 3 reasons. Number 1, payment shock. After 3.5 years of no payments, suddenly owing $400, $600, $800 a month again hit people like a truck, especially with inflation eating into every single paycheck. Number 2, confusion. Student loan borrowers are already reporting glitches and confusion ahead of major July 1st changes. Number 3, the system changed mid-game. The income-driven SAVE repayment plan, which lowered payments for millions of borrowers, was eliminated earlier this year. More changes are coming July 1st. People were on a plan. That plan got pulled, and many haven't found a new one yet. I need to stop here and make something very clear. July 1st, 2026 is a massive deadline for student loan borrowers, and most people have absolutely no idea. Major adjustments to federal student loans take effect on July 1st. Stricter limitations on deferment and forbearance. The end of some income-based repayment plans. New caps on Parent Plus loans, and the elimination of Grad Plus loans entirely. And here's a warning. Be extremely cautious about consolidating your loan after July 1st, 2026. Under the new laws, your repayment options may be significantly limited if you consolidate after that date. If you are behind on payments or even just unsure of your status, the time to act is right now. before July 1st. Okay, enough doom and gloom. Here's exactly what you do. Step 1. Check your status right now. Go to studentaid.gov, log in, look at your loan dashboard. If you're in default, you'll see a warning message in a red box. You can also confirm which servicer is handling your account. If your loan was transferred to the default resolution group, you'll need to create a new account at myeddebt.edu.gov. Your old studentaid.gov login will not work there. Step 2. Choose your path out. There are two main options if you're already in default. Option A is loan rehabilitation. You agree to make 9 voluntary, affordable monthly payments within 20 days of each due date. The big win here? Once you complete it, the default record is removed from your credit report entirely. Gone. Option B is loan consolidation. It's faster, but the default stays on your credit history. And again, be very cautious about doing this after July 1st. Step 3. Get on an income-driven repayment plan. If you're not in default yet but you're struggling, don't wait until you are. Contact your loan servicer before you miss a payment. There are almost always options on the table that borrowers simply aren't aware of. And sign up for autopay. Most servicers give you a 0.25% interest rate discount just for that. One last thing, and this is really important. Be cautious of scams. Companies that promise forgiveness or charge a fee to lower your payments may be trying to take advantage of a very confusing situation. Never share your federal student aid ID or your login credentials with anyone. Never pay anyone to fill out forms for you. Only your actual loan servicer can make changes to your repayment plan. Look, this student loan crisis is real and it's growing. But default isn't the end. It's a problem with a solution if you act fast. If this video helped you, share it with someone you know who has student loans. Because right now, they might not even know they're at risk. I'm Alex, this is Dollar Sense, and we'll see you in the next one.